Glad to have you join us again. It's now time for us to look at the trading activities at the Nigerian exchange. And let's start off by telling you that investors at the Nigerian exchange gained 1.93 trillion naira in 2 consecutive trading days as the stock market rose to the highest level since 2008, driven by positive responses to policy measures of the new administration led by President Bola Ahmed Tinubu. This impressive performance started on Monday as investors recorded 135 trillion naira gains as market capitalization rose to 35.18 trillion naira from 34.33 trillion naira on Friday. This positive trend persisted on Tuesday as the Nigerian equities market gained 1.65% to close at 669.29 basis points, and also market capitalization moved higher to close at 35.976 trillion naira. Meanwhile, market activity nosedived, with total asset volume and value decreasing by 38.82%, 54.067%, and 57.828% respectively, to trade at 8,922 basis points, with shares worth 844.72 million naira worth of unit and 9.41 billion naira respectively. Ambrose Omodion, Chief Research Officer, Invest Data Consulting, joins me now live via phone to do some analysis of these figures. Mr. Ambrose, good morning. It's always a pleasure having you join us on the program.
Thanks for having me, blessed. Yeah.
You've seen the report, you've seen the figures. We are still on the positive trend, gaining and gaining and gaining. What is the rationale concerning this growing momentum that we're experiencing at the Nigerian exchange?
Yeah, I will attribute it to one, like you just said in your intro, that positive reaction to the new administration policy and economic reform initiative that is ongoing. Apart from that, you can see that the exchange rate, which is the unified exchange rate for Nigeria, has made equity on Nigeria Stock Exchange cheaper, considering also the what we call price to earning ratio of the market that is below 12 times. Compared to that, our market is still cheap compared to other African market that yes might be saying we're coming onward. But I see that looking at the whole the emerging market index, our stocks are still relatively cheap there. For me, it is attraction in the market, and we'll say that the inflow into the market as a result of increasing demand for stocks has also supported the market, which has technical sense. But in general, as all eyes are still on the comment and NPC meeting, and also the earnings that is going to pick up any moment from now from the early filers, which are the further than shaping the market. And I believe also that the strength of this number we're expecting will give the market direction. But yesterday, despite that the market closed 1.65, we saw some profit-taking activities to say that investors who are trying the market that are kind of knowledgeable about this market knows that once they're an up market, it's time for to take profit, and I believe that's why market will have about 78% buy position yesterday and 22% sell. People are taking profit gradually in the market. But for me, looking at the market now, I think that the momentum is still high because on a daily return, we're seeing the market is positive on a weekly, monthly and quarterly. And yet to date, market is almost getting around 28.08% in terms of our market is bullish, hitting all-time high of 16 years. These are the factors that I believe that needs to also guide the investor that market on uptrend will also call correction or come in the way. And if correction comes, it's going to give the market more strength to continue, especially at all eyes on the earnings. The pullback now should put the opportunity for those that are in the market to buy into the market. That's what I see. There's no time to panic because the factors that brought the market to this level are still very, very much intact. For that, the market should not panic because there's a pullback to profit-taking activity, because the activity is part and parcel of the market anytime, any day. That's why you see market buy low and sell high. It will be profit-taking up when the market is low, you buy, then when you go begin to sell. And that's why anywhere in the world, so the market was the need to put the opportunity to buy at low and sell high. For me, the market is having a strong momentum, but investors don't be carried away or trader, they don't want to take profit in this market.
All right, I like that word there. investors should be aware and be at alert and not be carried away by the profit taking going on in the market. Ambrose, we've seen positive trend in 2 consecutive days, 2 consecutive trading at the NGS. It's the midweek. What is your projection? Are we going to continue with this upward trend, or perhaps I say a decline? Your reaction?
Well, for me, I think that there should be a profit-taking activities that might reduce the strength of gain or the amount of gain will happen. And that for today, actually, a pullback, our market today marginally for today, but profit-taking activities will increase today, tomorrow. But the market will still grow, the week will still grow positive. But from next week, we're just seeing, we're going to see the inflation figure for the month of June, which all eyes and all analysts are provided because of the change in fuel price, knowing that food and energy is what impact inflation anywhere in the world because of transportation, and now we're having the insecurity. Farm, there's no access to farm, will be that there's going to be a kind of a jump in inflation. That will shape market next. But for this week, I start to see a mixed market of profit taking, also positioning ahead of what any season and outcome of what MPC meeting also in the same month. Yeah.
All right, finally, before I let you go, the MPC meeting of the Central Bank of Nigeria will be coming up next week. Okay, how will all of these fundamentals play out in market outlook for this month of July?
Yeah, for me, the MPC meeting has a lot of stars in their hand, being the first one in this new regime, and also there's also some form of reform in the monetary policy, side of the economy, knowing that the fiscal and monetary have to work together. I believe that we should see that, because now that we have already seen high inflation, we are also seeing high interest rate already in the economy, and the factor driving the inflation pressure are still more because of the unified exchange rate and all the increase in the change pump price of fuel. All the time, that means that the FPC have to really be tactical in that decision, because one, if you increase rate, you're going to tighten the economy more. Also, if you bring it down in the midst of inflation, it's going to also support inflation. Or that means, for me, I say that it's important for now, not like also in US and also in Switzerland, important to watch and see. Like, bring up for this kind of field where we are now, FPC meeting should not even go take it up or take it down. They can pause to watch and see what to play out between now and the next upper FPC meeting that will come in September.
All right, Ambrose Omodion, Chief Research Officer, Invest Data Consulting Limited. This is the much we can take, or this is the much time we permit us to take on market review at the exchange. We'll still see how things play out. You've given your own verdict. Let's see how market is going to react with all of these projections and the fundamentals we're seeing. As much as I can say, thank you so much for being a part of the show this morning.
Thanks for having me.
All right, folks, let's shift focus now to our first conversation on the day. Still to come, with the growing disruption caused by technological advancement in the business community globally, the rising trend of artificial intelligence, popularly known as AI, has been projected to disrupt the global job market and cause more job losses in Africa's biggest economy, that's Nigeria, in the next 5 years. We'll have more details in this report after the break. To stay with us.